Hello, and welcome to another update video on HBAR. Yeah, on the HBAR chart, the market has also started a dip, a pullback. I think we talked about that already yesterday or a couple of days ago when we talked about the structure already. And we saw already on Friday the rejection from our resistance area. So HBAR continues to respect the Fibonacci levels like many other crypto charts. We've seen a rejection in the resistance area, and these resistance areas, they are relevant because they tell us where the price could get rejected before a breakout. These are typically the last tests, you could say, for the price. Basically the last test for the bulls, right? Or rather for the bears, actually. The bears need to defend these areas to keep the correction intact. The bulls need to break above these, and we had several very, very similar resistance areas on cryptocurrency charts. Here on the HBAR chart, it was defined between 20.6 cents and 22.3 cents. Yeah, and the price already got rejected from the very first Fibonacci level, indicating some weakness. I mean, some charts moved a bit higher, but really, it's 50% retracement is completely acceptable for a B-wave bounce. Yeah. Remember, we saw a 3-wave rally from the 19th of May low to that swing high, and now we see a decline, which might take the shape of a 5-wave C-wave to the downside. Again, as per the blue scenario, it is important to recognize that the price could currently be in this C-wave. And what we can do in this video is just to understand what are the relevant support levels and, yeah, what is the projection target for the C-wave to the downside. So I think it is important to recognize that in such a corrective pullback, we have 3 legs typically. The A-wave that bottomed already here on the 19th of May, the B-wave topped, and now the C-wave decline has often the same length, or forms the same length actually, as the A-wave down. So how do we calculate that? We take the trend-based Fibonacci extension tool, we measure the length of the A-wave, we go to the high of the B-wave, and then we see these standard Fibonacci extensions. And the good news is that the blue zone, which is that Fibonacci extension zone, aligns very well with the standard Fibonacci retracement zone. So in this case, the area between 16.8 cents and 14.7 cents might give us a slightly more, narrowed down target area for this C-wave, which means ideally the price would move towards this area. Any break above the resistance area here, or rather actually above the last high, we can delete resistance. Any break above the last swing high there could indicate that the bulls are making a direct comeback. For now, the structure would look best with a test of the Fibonacci zones here. That's the update on HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.